Hello, amazing Financially Fierce community. We are up to episode 3 in my 4-part mini-series on insurances. And so welcome if you've been playing along at home this whole time. Guess what? We are over halfway through. Well done, you. If you are just landing on this episode, hello. You might have been sent this episode by someone you love, who loves you, who wants to make sure that you are adequately insured. Welcome. And you may too want to forward this to someone that you love and care about, because having the conversation around this stuff can be a bit ick. It can feel really uncomfortable, and it's like, how on earth do I bring this up? But I also want to make sure people I love are cared about. I can do the hard work for you. You are so welcome. You are welcome to forward this episode to someone that you love, that you care about, that you want to make sure in the back of your mind is protected and looked after should the worst happen. And that might just be you. So today we're going to talk about one of the most common yet commonly misunderstood insurances, referred to as TPD. In today's episode, I'm going to talk about what the hell is it, when do you need it, what do you need to understand about it, why should you or shouldn't you have it, and some of the details that I think are quite important to wrap your head around. Strap yourself in, get yourself a coffee, a wine, a beer, a water. We are going to go a little bit deep, but I also want to do a bit of a disclaimer and disclosure. The disclaimer is we're going to talk about some hard stuff throughout this mini-series, in case you haven't listened to the first 2 episodes, because we're dealing with awful, unfortunate issues that annoyingly arise often, but we don't want to hope happen. And yet we must prepare ourselves financially for them. And I also just want to say that as an able-bodied person, I am hyper aware that some of the language that might be used in definitely this episode, but probably in the others as well, is quite ableist. And so I'm going to try really hard to be aware of that. It is very frustrating that insurance by nature is a discriminatory product set. But I also recognize that, there are people who have disabilities and know people who have disabilities and might find some of the language that I personally use not correct, or just as a industry that we use not great. If you've got feedback for me, as opposed to what the products are called or how they work, annoyingly I can't change those, I want to hear it, because I don't profess to get everything right all the time, and I'm hyper aware that especially in conversations like this, I need to learn more, and I don't pretend that I have all of the answers right 100% of the time. So if you've got nice feedback, not asshole feedback, let's be honest, there's enough of those people in the world. We don't need to add to the dumpster fire that is nasty feedback. But if you have genuine, kind, constructive, helpful feedback that you would like to pass on to me, I'm so here for it. JessBrady _financial advice on the gram. Let's get into TPD. What the hell is it? Do you need it? When do you need it? And what do you need to think about in today's episode? This is a podcast for everyone that wants to learn how to make fierce and bold choices with their money. We'll talk about how to shape your money mindset, investing for your future, your spending habits, the good and the bad, plus how to achieve your financial goals, and most of all, how to be financially fierce. I'm a financial educator, and I want to empower you to be more in control of your money and build the financial future that you want. I run the Greenhouse Money Growing Program, and you can find details of that in the podcast show notes. My name is Jess Brady. It's time to get financially fierce. Okay, so let's say you got your super statement. You're looking at your super statement to try to figure out, does any of this make any sense to me at all? And you notice that there is something called TPD on the statement. Perhaps it's under something that says life insurance, which we've covered in episode 1 of this mini-series. And it's just got an amount of money next to it that, I don't know, maybe is a lot of money, maybe is a little bit of money, but you don't really know what it's for. You don't really know if you need this thing. And so you just kind of ignore it and think, okay, well, that seems to be sorted. God knows what I need it for, but it's there. And then you mentally tick that box and you move on with your no doubt busy life. But here is the problem. Like the other insurances we've covered thus far, it's a little bit more complicated than that. And I don't want you to encounter any of these types of insurances, to be fair. But I certainly do not want you ever to be TPD'd, because total and permanent disablement means just that. It means that you are totally and permanently disabled and this is an and that is so aggressively capitalized and like asterisked and bolded, you're not able to work again. So we are talking about the worst case scenario for you whilst you're still here. Again, I know this is a really uncomfortable thought, and it's one of those ones where, as someone who has total and permanent disability, I've like done the thing and I've sorted it out, not only for myself, but for lots and lots of people that I've worked with. And then you just kind of hope that you've ticked the box and you just don't need to think about it again. Because like no one wants to lay awake at night thinking, shit, what happens if I was TPD'd or my partner was TPD'd or my parent was TPD'd or my sibling was TPD'd? Like we have enough things to catastrophize about. But the unfortunate reality is that this happens to people every day. And you see it on the news, you see it on your social media screen, you see it on your GoFundMe, pop-ups that people post. Like this stuff happens. And for you to be classed as totally and permanently disabled without the ability to work again means shit has gone bad in a very bad way. So I genuinely hope that you have this cover. I hope you have it at the level that is going to be right for the circumstances that you find yourself in, but I also hope that you never find yourself in those circumstances. Now, sometimes, especially as I start explaining the different types of cover, the natural consideration or question that I get asked is, Jesus Christ, Jess, do I need all of these? Like, I've got life insurance, I've got income protection, I've got car insurance and private health. Like, what do I need more for? The problem, dear friend, is that if you think about insurances almost like pieces of a jigsaw puzzle, and actually when you start looking into insurances, you probably will start seeing jigsaw puzzles used a lot, because the analogy sort of is that they are a separate piece to the puzzle and that the puzzle is not complete or full until all of the pieces are in there. Now, that's not to say you need all of them all the time, but most people need most of them most of the time. And if you remember that they have very specific elements or specific purposes, you start to realize, oh, how annoying. I can't just have one because it means that all these other risks are still there. Annoyingly, most of us need all of them. So let's go through today a little bit more about total and permanent disability and what you need to go through to be classified as totally and permanently disabled, but also what you need to consider from a sum insured perspective as well. So as I said, this is like worst case scenario, but you're still here. To be totally and permanently disabled in Australia today, and it's 2025 when I record this, is expensive. Hugely expensive. I don't care what stopgaps the government has put in place, safety nets, etc. You talk to anyone who has been through anything similar to this, and they will tell you that their life not only cataclysmically changed from a physical health perspective, often from a mental health perspective, but their financial health generally, in most instances, also was changed forever. And whilst this is one where you are, I think, off the top of my head, and I don't think it's an unreasonable thing to say, I think it's the least likely one to occur to you, which is great news, really. But if it does happen, it is like the one that is going to possibly cost you the most over your lifetime. Again, we're back to my lotto that no one wants to win analogy. You don't want this ever. You don't want anyone ever to be TPD'd. But you certainly don't want to be TPD'd and given a shite amount of money that goes absolutely nowhere to what you actually need to get yourself the care that you are requiring, to get yourself the support that you need, be it devices and different things which we're going to talk about, but also to be able to live as best as you can in the new world that you would find yourself in. So, total and permanent disability, or TPD as it's known, is a lump sum payment given to you, as I mentioned, if you can't work again, ever again. So the watermark is pretty high, right? And if you think about it, and what I just want to go on my first tangent of the day, or of the episode on, is when you are young and you have a whole career ahead of you, I think it's harder for doctors to say, yeah, never again will this person work. It's like, well, they're 25. Like, are they really never, ever going to work again in their entire career? That makes it hard. Unless it's quite clear cut, which means something really terrible has happened to that person. But I think the younger you are, the more at risk you are of actually having a bit of a murky middle ground of like, well, could they go back to work ever? We're going to talk about definitions in a moment. And then the other thing that I think about, and I haven't fully figured out how this is going to be handled, how it is handled, is if the requirement is that doctors, generally 2 doctors, sign off that someone can never work again, and we'll talk about definitions in a moment. I realize I just said that, but like, just go with me here. How can they confidently do that? Genuinely, how can they confidently do that in an environment where medical advancements are changing so rapidly? I don't know the answer to that question, but I think it would be very hard. Let's say you were a 30-year-old person who suffered something that is probably going to have you out of the workforce forever. Is a doctor going to look at you and be like, well, technically you've got like 35, 37, maybe 40 years of working career ahead of you. I don't know, maybe in the next 10 or 20 years, we're going to find a cure for this thing, or we're going to be able to fix spinal cord injuries or whatever. Maybe we're not sure yet. Now, I don't think that that's necessarily how they assess it, because that's not fair, because like that is a lot of what-ifing. But I do think that as medical advancements and technological advancements improve, I almost think it's going to make it harder and harder and harder to claim on this policy. And this is not to have you run away from getting it, because as I said, if it happens to you, Jesus, you need a lot of it. But I think we just need to be honest about this environment that we're in where things are dynamically changing. I read an article last week about the successful treatment of something that for a very, very long time has been a horrific, I should have looked at this before I started the episode. I want to say it was Huntington's disease, but like definitely go and Google if it was that. But if it was that, that's something where for a very, very long time, that was something which had horrific implications on someone and their life expectancy. And so if we are now starting, let's pretend it was that, because I can't actually remember if it was, and I'm so sorry if it wasn't. If we are now able to treat that and treat that successfully, then we are going to have knock-on implications for insurance contracts, because some of them explicitly state things like that as being covered. So we're just in a time, I guess, I'm just like contextualizing the world that we live in, just giving you a bit of a feel for the room. But I think the most important thing to know about TPD, when we talk about ever being able to work again, is this definition that it's all hinged on. And that is whether you have a total and permanent disability contract that is considered an any occupation policy, or whether it's considered an own occupation policy. Now, in case you're like, oh, I didn't even know there was options. I have no idea. How would I know? I will help you. If you have a policy inside superannuation that you were given as part of becoming a member of that fund, you didn't do any applications outside of applying for the new super fund, if you never applied for any sort of linking or complex stuff to do with that TPD policy, I can pretty much bet my ass, for what it's worth, that you have an any occupation definition. Why am I so confident? Why is she wildly, arrogantly confident about that? Because that is the only policy that is legally able to sit inside superannuation. You can't have an own occupation TPD policy inside super. It doesn't actually meet the definitions. Now, there are some old policies that are own occupation. They shouldn't actually be held inside super because they don't meet the definition. And the last thing you want is someone to suffer. Well, the last thing you want is someone to suffer it. But like, can you imagine they suffer it, they get the claim paid out through the insurer, but then the trustee won't release the money because it doesn't fit superannuation law? Oh, Jesus, we don't need that. So I'm going to say 99.999% of superannuation only held TPD contracts are categorically any occupation. What does that actually mean? Well, it obviously depends on the definition of your contract, which annoyingly you're going to have to check. But in the overwhelming majority that I have seen, remembering I used to be an insurance specific expert for over a decade, is the definition normally says that you are unable to do any job for which you have education, training, or experience in ever again. You are unable to do any job for which you have education, training, or experience in. Now, I don't know your background. Perhaps you're in quite a specialist role and maybe you started in that role and that's all you've ever done. I have had quite a swings and roundabout style career with ups and downs and tops and turvies. There was a time in my career where I was in a call center. My first job, we called I didn't come up with this name. It was gifted to me by the team that I was part of, which also did the same job. And our job was, quote unquote, switch bitch. I know. Because before robots, you used to call a bank and you would be asked which area of the bank you wanted to speak to, and we would switch you to the right area. Yes. When we were not taking a zillion calls a day, we would have to use these roller things, and I'm currently doing it looks like a rolling pin. If you're watching me online, you'll just be having a great giggle at me attempting to show you, where basically we would get all the letters for people who would get renewals for their insurances, and we would roll it over this thing that would then effectively like do the licking of the letter via this rolly thing, and then we would seal the letter. So we were doing, paper sealing, letter sealing, and switching people. And then I moved into a different admin role, and then I moved into the business development side of a wealth management company and sort of moved on and up from there. But I guess, before that, I worked at McDonald's. I did drama teaching, if you can believe it. And sorry to everyone who I taught drama to, thoughts and prayers to you. And I did face painting in school holidays. Also, many thoughts and prayers to those poor children. I had a career that has had lots of variations in terms of types of duties. And so what I think about is if I had an any occupation definition and I was seriously injured or unwell, are they going to say to me, hey, but you have experience in call center world and we can set you up with a device where your eyeball can move people to the right department or not. Or you have experience, quite a lot of experience, putting letters together and sealing them. We are going to find you a job where you can do that and that only because you have education, training, and experience in that role or in a role that's similar to that. And so, I don't even know if those roles exist anymore because there's probably machinery that does that for you. But I think you really do need to just sit with that definition. To be paid out under an any occupation definition, 2 doctors have to sign off that you can't do any job ever again for which you have education, training, or experience. That's a hard test to me. The alternate, which cannot sit in superannuation, which I've just mentioned before, is can you do your own occupation? Now, there's some caveats to that. Not all occupations will be allowed to have this type of contract. Some of the insurers or many of the insurers are like, yeah, nah, your only available option is an any occupation definition. So this is not one where you get total control over which definition you get. You get some in most instances, but you need to know that there are some situations where they won't offer an own occupation. But the definition normally for an own occupation total and permanent disability contract is can you do your own job ever again? And the classic example that is used to help you understand the differences, and I don't know if this has ever actually genuinely happened before. Maybe it has and maybe you know about it, and if it has, can you tell me about it, is a surgeon. Let's assume you were a surgeon and you had something happen either via some sort of musculoskeletal injury or some sort of illness that started impacting your dexterity. Let's say you were no longer able to use your hands. If you're a surgeon who doesn't have full use of your hands, my assumption is you're probs not doing surgery anymore. If you had an own occupation definition, if they believed that that was a permanent event, so it's not like, oh, you had your nerve was impacting you, but you just had I don't know. I mean, clearly I'm not a surgeon. You just had an injury because your nerve was trapped and that was making your hands numb, and now it's fixed. You're good to go. I'm talking about something that is permanent and likely to continue forevermore, because remember, we've got a work test here. So let's assume you had that hand injury. My assumption is you're not doing surgery anymore. You're certainly not doing surgery on me, to be fair, respectfully, if you can't use your hands. But then I get into this mindfuck, if I'm really honest, where I'm like, oh, but aren't they using robotics now? Like, do surgeons even need to use their hands anymore? Are they just tapping at things and moving things from another room? I don't know, but I'm just going old school with my example and assuming that they are using their hands. If 2 doctors were able to sign off that was a total and permanent disablement that precluded them from ever doing their own job again, it is likely they would be paid out that full amount of lump sum TPD cover. Where it gets much harder and greyer and more complicated is if that person, that surgeon, was to have an any occupation definition. Because the insurer might say, well, we get that you can't do surgery, but you've got experience doing, ward rounds. You've got experience doing, you could go back and teach or be, able to do, insert other job that is similar but not the same based on your education, training or experience but doesn't require surgery. You can start understanding how these seemingly boring, benign differences become very, very important at claim stage. Again, when we use this surgeon with no use of their hands, I actually think it's a crap example because whilst it really depends. Obviously, everything depends. But, we use it almost as a flippant example where their life may not include surgery anymore, but perhaps they could just get on by. But what I really think we need to talk about is that for most people who are getting a TPD payment, or for many of them at least, their lives are very, very impacted. They may not be able to hold anything with their hands anymore, feed themselves, dress themselves, bath themselves. We look at these things called activities of daily living. They may not be able to drive anymore or hold a coffee cup or do anything. Like, there are a lot of considerable implications. Take someone who has a blue-collar job who, falls off a job site and has a back injury, a spinal cord injury, and is now wheelchair-bound. There are a lot of cascading implications. Sometimes I worry about using this surgeon example, that it just sounds like, they just continue with their life and everything's totally fine, and sure, their hands may not work a lot or as much, but everything else is fine. Well, actually, that's not a representation in my experience of the people who get TPD payments. These people normally have considerable need, and it's a considerable injury or impact or illness and has huge, huge financial implications. So in case you're like, shit, I think I've got any occupation TPD. Firstly, you've got some. Cool. You need to know that own occupation, as I mentioned, whilst can't sit inside super, can be hybridly linked. And I'm going to do a damn bad job of explaining this. But effectively, the insurers have worked out that not everyone wants to pay all the pennies from their cash flow for the insurances that they need. Fair. So they've worked out a way to set up some retail insurance policies that you need to normally go and apply for, where part of the definition or part of the policy can sit inside super under an any occupation definition. Often this is called like super link or super linking or hybrid linking. Every company's got a different name because, why would we standardize and keep it simple for you? So in a lot of instances, quite a big bulk of that overall premium sits through super. And the test will always be, can you do that any occupation definition? Do you meet that any occupation definition first up? If the answer is no, then there is often a linked policy or linked component of that policy outside of super, which you need to pay for. But in a lot of instances that I've seen is not a huge overall percentage of the premium. That is the fallback. And if you don't meet that any occupation definition, then they'll assess you under that outside of super component of the policy and say, can you do your own job ever again? So it's kind of the having your cake and eating it too. You're paying for part of the premium inside super, which reduces the burden from a cash flow perspective, albeit coming from your retirement savings, but you are not completely giving up the definition that you might want. You just need to recognize that if you do get paid out under any occupation first, or that will be the assessment criteria that they'll look at first. There might be additional tax implications. There will be tax implications, but you have the safeguard of knowing, well, if they don't pay me out under that one, then generally the definition says that they can look to see whether I can do my own job ever again. Again, assuming that you're able and entitled to have an own occupation definition. So after the break, I am going to talk to you about how do you figure out how much you need, what data have I got that might be helpful or relevant for you to consider, and some practical tips to get you with the right level of cover for your TPD needs.
If you're after personal financial advice, don't get it from a podcast. If you would like help based on your own personal situation, head over to moneypodcast.com.au, click Get Help, and we'd be happy to introduce you to one of our trusted professionals. Our panel of vetted financial advisors and mortgage brokers work with people all over Australia so they can connect with you wherever you are. That's moneypodcast.com.au and click Get Help.
Okay, welcome back to our deep exploratory dive on total and permanent disability cover. You are so welcome. The episode you never wanted nor asked for, but probably needed. I want to give you some data. It's not nice data, but I think it's very insightful data. And thank you to Zurich for doing a cost of care report. It is so long that I have just pulled out a couple of pieces of data that I think are really pertinent for this episode and also the next episode. So when we talk about how much cover do you need, it's obviously quite a hard question to answer, because if you knew what you were going to have, when you were going to have it, what life looked like by then, we would be able to back solve exactly how much cover you need. The problem is we don't know what is going to happen to someone, when it's going to happen to them, and what their life is going to look like. So we have to make an educated guess. If you, like me, like control and feel like that feels uncomfortable, you're in good company. But that is the reality of the whole insurance conundrum, because ultimately we don't want you to have any of these things. But let's give you some data. So total and permanent disability is often, well, there's a lot of people that have these claims because of musculoskeletal illnesses, injuries, etc. But mental health is also a really big one as well. Remembering that if you are going through retail insurance cover, you are going to be asked about your pre-existing situation. Your medical records will be looked at. And if you have sort of the default super cover, it is very, very likely that you're going to have that built-in pre-existing exclusion clause in there. So this is some data from the Zurich Cost of Care report, which I believe is volume 2. I actually worked on volume 1, just as a disclaimer. Obviously, that's why I think it's good, because I worked on the first issue of it that went out, I don't know, like 8 years ago. It was a long, long time ago. All right, this data is from a few years ago, but let's talk about it from an injury perspective, because, of course, none of us want to think that we're going to have a medical illness that is going to prevent us from working again. Most people think that it is going to be some act of God. Probably not, act of some horrific, it's going to be an outcome of a horrific, unexpected injury. That is what a lot of people think. They think, oh God, if it's going to happen, that's what's going to be. I don't know if that's true, but that is, in my experience, what a lot of people think. So in 2021 to 2022, there were 538,000 injuries in Australia. That is 1,473 every single day. 54% of those were experienced by men, and the highest number of male cases was in the 20 to 24 age group. Injuries accounted for 13,900 deaths. Awful. With 44% of deaths impacting people under the age of 65. So this is possibly where people are thinking, well, if it happens to me, it's going to be from some sort of injury. A, because of the number of events that are occurring every damn day. B, because particularly for younger men, they are statistically the ones who are more likely to have these sort of injuries occurring to them. And it results in a very large proportion of deaths for younger people, people under the age of 65. So what you'll notice from a premium perspective is you'll probably notice if you are a younger man, you are likely to have a higher premium. And actually, as you age, that bell curve of premium rates will go down because statistically you're less likely to have an injury. And then it'll probably go back up again as you get older. Whereas if you look at other types of insurances, you'll normally see the premium bar or how much you're paying go up over time as you get older. But because we see so many injuries in that age group, you'll see a spike earlier on. So the average cost or the fallout, like let's talk of numbers, yeah, because I'm a numbers gal and I think you're here for some numbers. For a lot of people that have these injuries, the result of that is a spinal cord injury. Yeah, we never want to think this happens to us, but as you've just seen, it happens. It's happened to someone today. It's happened to someone right now. And if it didn't happen today, it happened to someone yesterday, which is awful. And it's going to happen again tomorrow, which is why I feel quite compelled to talk about this stuff. And I wish I didn't have to. The average cost of a spinal cord injury per year is allegedly, from this cost of care report, $119,940. So let's, my friends, round up $120,000 to $122,350. Let's just round up 123. The average cost per year for someone to have a spinal cord injury in Australia is between $120,000 and $123,000 a year. That is for the spinal cord injury. That is not to pay for all of your bills and your food and your Netflix because now you're at home a lot perhaps and want to watch things. This is the cost of being injured in that way. When they look at lifetime costs, it is staggering. I don't even want to tell you, but I feel compelled to. The estimated individual lifetime costs for someone who is a paraplegic, so someone who suffers paraplegia, is $6.8 million. I don't know very many people who could stump up $6.8 million to cover that health event, let alone their other costs. If someone suffers from tetraplegia, $12.9 million. $12.9 million. 46% of spinal cord injuries are a result of land transport accidents. I presume that's a car accident, predominantly land transport accidents. I'm going to say that that's a car accident, motorcycle accident, maybe it's cycling accidents. I don't know, tractor incidents. I'm guessing what land transport accidents are, but that is the overwhelming majority, right? 46%. 36% were the result of a fall. Okay. So if you're in a job where that happens to you and you can no longer work again, you want to be sure that you have got money for some of these horrific costs that we've just... So remember in the last episode we talked about income protection, which is giving you a reduced amount of your income. That is to cover your costs. Yeah, that is to keep food on the table. That is to keep you up to date, hopefully, with at least the majority of your bills. That is not how total and permanent disability works. Remember, it is a lump sum amount of money, one off. If you meet the definition and you can categorically have doctors say that they agree with that, you'll get paid a lump sum amount of money. So in theory, you could potentially have a situation where you're getting paid at least some form of income the whole way through, and thus the total and permanent disability amount of money is trying to help you with all of the other cost burdens. Now, of course, you might have an income protection situation where you are not TPD'd, and so you only get income protection. And this is why you can't just have TPD. Because what if, like me, you have your gallbladder out, you have sepsis, and you're back at work within 4 months? I'm not TPD'd. Here I am, back at work. I have not even tried to claim on my TPD contract. I have with my income protection. So this is that jigsaw puzzle that I was talking about, which feels onerous because you're like, what the hell do I need all of these for? Because you can have situations where you'll meet one but not the other, or you will meet both, but they do different things. They're different assessment criteria and they're trying to help you financially in different ways. So the reason I talked about the musculoskeletal stuff is because it is such a big proportion of overall claims. The other one is around mental health. And so again, using this report from Zurich, the Cost of Care Volume 2, What we know is that via the ABS statistics of 2023, more than 2 in 5 Aussies, 42.9% of Australians aged between 16 and 85 years have experienced this is their language, mental disorder in their lifetime. With 1 in 5 Australians, 21.5%, experiencing a mental disorder in the previous 12 months. Goodness me, 1 in 5 is a lot. Let's just kind of hold space for that. And sending you love if you are part of that 1 in 5. I think I am technically classed as one of those 1 in 5 because I see a psychiatrist for my neurodivergence, my ADHD, and the insurance companies see that as a mental health disorder and actually quite challenging, I believe, in getting new cover for people with ADHD. But there are people who are part of that statistic who are having a very, very tough time. And if that is you or someone that you know or love, I am thinking of you. Obviously, to meet a level or a criteria where you are categorically being told that you'll never work again is quite challenging when it comes to mental health. What I can see from this data is that on average, this is for what they call affective disorders. So this includes depressive episodes. I'm going to mark up this. I'm going to mark up how you say this. I'm sorry. Anyway, I can't actually say it because I don't know how to say it. DYSTHYMIA. Anyway, it does have in brackets persistent depressive disorder. And I'm terribly sorry that I can't figure out how to say that word. It also includes schizophrenia, bipolar, affective disorder. So for people who have affective disorders, the average time off work per year is 75.4 days. Women are more likely, according to this information, to report experiencing mood disorders compared to men, with the highest prevalence in women aged 25 to 34 compared to the highest prevalence for men in the age group of 35 to 44. So women slightly younger, 25 to 34, men slightly older than that, 35 to 44 age group. Depressive disorders accounted for 23% of non-fatal mental health related burdens is what they say. So what is the risk? The lifetime risk for someone to have one of these is 1 in 6. That's large. If you've got a group of friends of 6 friends, there is a risk that one of you will have this impact your life. In terms of recovery rate, up to 50% of people recover within the first 6 months. And then the relapse rate is about 30 to 50% of those who initially recover. So there's a high reoccurrence of risk, which is why when you're applying for insurances, back to kind of episode 1, I know I keep harking on about it, they are so tough because even if you're like, well, I had this thing, but like I'm totally fine now, they are looking at data like this and they're like, yeah, but there is a really high risk of reoccurrence here. We want to protect ourselves from that. Clearly, based on that work test, can you do any occupation? Can you do own occupation? In my experience, which has been limited with mental health claims as an advisor, I certainly saw a lot when I was in the insurance companies, but I didn't have any TPD claims for mental health purposes when I was giving advice. But in my experience in the insurer sort of side of things, it is really hard for someone to go through that process and having to have the burden of proof really clear that they can't ever work again. And ultimately, in some ways, you almost don't want to meet that definition because you want to believe, okay, there is some hope that I can get back to, feeling better or feeling, able to contribute. There are a lot of comorbidity issues when you have someone who maybe starts out with an injury, but then because they have lost connection to their job, their purpose, their community, whatever it might be, their hobbies, they then sometimes actually have considerable mental health issues that come from that as well. So it's just a mindfuck is, I guess, the ugly reality. So mental health and musculoskeletal is a lot of what I saw when I was inside the insurance company. And let me just say, we also had not a lot, but we had some people trying to claim who, as it turned out, were not in the state that they said they were in. And remember that social media can show a lot of things. So like if you're going to say to someone that you are not working, that you are not capable of doing anything, and you are posting things that show that you can do quite a lot, you'll find that the insurance company is going to decline your claim. Just putting it out there. Okay, so who needs TPD cover? Anyone that genuinely could not withstand the financial implications of having this happen to them, which is most people. However, your need for TPD, in my opinion, reduces if you've got income protection at the right level with a long benefit period with good definitions. You don't need necessarily as much total and permanent disability because you've got your income protection that is going to be able to provide you at least some form of income along the way. But for the majority of people who haven't got bazillions of dollars laying about that they could live off, you need some form of total and permanent disability cover, generally speaking. So most especially if you've got a dependence on your income, which we've just covered, you have debt. Because remember, if your income protection is going to pay you, it's not going to pay you at the full amount. So you probably don't want a mortgage hanging over you. And like, I don't even know if a bank would let you maintain a mortgage, sincerely, if you were never able to work again. I'm assuming that they would call that in. You don't want that to happen to you. If you have children or plans to have children. But I also think we need to consider some of the other elements. So I worry genuinely about people who don't have a property, because I think in the dumpster fire that is the rental crisis that we find ourselves in, if you have complex needs in terms of what that house must be set up like, you have access issues, you have, the need for, wheelchair-friendly facilities, be it in the kitchen or the bathroom or whatever, and you don't have an income, how many houses are actually going to fit that bill? How many landlords are going to give you the preference? How many government-built houses are actually happening? And how much security in that tenure do you get? Like insurance, it's a bit of a grey area because what they will say is they don't want to put you, quote unquote, in a better position that you were in before you receive the money. No one, in my opinion, is in like a better position for being TPD'd. But I actually think there is a lot of validity in saying, well, it is unreasonable to assume that you could get a rental that you could stay in for however long you need to, that is going to be perfect for you without probably needing to buy one. Now, the problem is if you actually wanted to go and buy one, you would need to get the money from somewhere. And so if you added that to your total and permanent disability need, it probably increases how much you need quite considerably. But I just want you to think about that because it's often one that gets missed when we assume or consider how much we need. Now, if that was to happen to me yesterday and I stayed in the place that I currently live in, I would be in so much trouble. I have a terrace that was built, I think, at like the turn of the century, be it 1900. My stairs are genuinely terrifying. My friends have mostly all fallen down them at some point. It's like a ladder. There's no way. If I had mobility issues, I would be able to get up and down my house. I have a shower that's over the bath. I wouldn't be able to get in or out of there. The benches are quite high. There's like a lip and stairs to get into my back courtyard. Like it's just totally inappropriate for someone who had mobility issues or was in a wheelchair or what have you. And so if you do have a house and something bad happened to you, you're probably going to need to either move or get it fixed to be able to look after you. I don't know if you've looked into what that costs. That costs a lot of money. Forget about how much you'd need to get medical support and, in-home support that might be outside of what the government's covering. People sometimes want to have modifications to cars and all of those sorts of things. But like just your house in itself would need to be modified in most instances. That costs a lot of money. So when you're trying to think about how much cover do I need, it's a really hard one because, again, statistically, it is unlikely to occur. But if it does occur, as you can possibly see, these costs add up quite quickly and the amount of cover can be quite high until you build up assets where you can start to reduce that level of cover need. Always, in my opinion, go and get help with this because you are factoring a couple of things: your risk, your need, the outcome that you are looking for against cost, and trade-off between other financial goals. And it is likely you will end up somewhere in the middle where you're not overly perfectly happy with any or all of these unless you've got an unlimited budget. Own occupation often costs quite a lot more than any occupation, because you can imagine it's generally an easier definition to claim on. So I feel like it's quite a heavy topic to talk through, but I just think it is important. If you find that your TPD contract is an any occupation contract and that's inadequate for your job and your specialization, you might want to go and figure that out. If you've now looked at it and gone, oh shit, it's only like 2 times my income or 3 times my income, and now you're doing the mental math of like, okay, well, I'd need to clear my mortgage, or I'd need to have significant money to pay off or pay for modifications. I'd need that income gap between what my income projection's covering and what my true costs are, because like, I don't need an incentive to get back to work. Like, I need that bill covered. My partner would probably want or need to take time off to support me and to like support our life. Like, do I need to factor in their income for a year or so that they could take time off to help me if they need it? Like, all of these things need to be factored in, and you need to figure out what that's going to cost and whether it's appropriate. But in the overwhelming majority of cases that I've seen where someone came to me for advice, I looked at their TPD amount. They were quite happy with it. And then when I started to dissect where that would go, quite quickly they realized I'm grossly underinsured here. And like, thank goodness this hasn't happened yet, because we would be in a lot of trouble had we only had this cover, only at this definition, only with this amount of amount insured. Go and check and see, A, if you have any at all, any at all. B, what your definition is. C, consider whether you want or need more, and can you get more? Can you get a different definition to what you are considering, to what you already have, I should say, and how much more would you need? That's a question for you and or an advisor. There are sometimes policies that you can take out if you are doing domestic duties. Sometimes there are definitional changes if you have moved careers. So like, again, you need to have a look and see what exactly is being covered and what is not being covered. But I think this is one where we are so flippant about it because the risk appears so low. And you honestly just want to think that if it does happen, that it wouldn't mean financial ruin. I think we all want to live in a world where we just think that in some way, shape or form, we will be taken care of, be it from the government or private health cover or, I don't know, the good people around you. And there are wonderful people who really rally when bad things happen to people. And like, that is beautiful community spirit. But I also have met enough people who have been through something like this who felt extraordinarily uncomfortable about placing additional burden on their family members, be it that they had to move home or their partner couldn't work anymore or they had to start a GoFundMe account. Like, obviously there are people who are like, yes, please do it for me and I'm so grateful, and I'm sure everyone's grateful. But there are other people who are like, I just feel like a burden and I hate that I have to ask people to do this. And if you can financially look after yourself so that your community can show up and support you in ways that are not financial, I think that is what a lot of people who have had this happen to them wish that they could go back and do. What do you need to be covered for? What does your partner need to be covered for? How about your siblings? Have they got TPD? What about their partners if something happened to them? What about your bestie? Your good friend, your work bestie, whoever it is worth having the conversation to say, did you know I learned this the other day on a podcast by a very strange lady? Because I would much prefer that you send this to them and you have the awkward conversation, or have it through me, and get the right level of cover for you. I said this in the episode before, but I'll say it again. If you do need to claim, You're going to have to obviously get quite a lot of paperwork and you're going to need to have doctors sign that off. But your financial advisor, your insurance expert, in my opinion, should be the place that you go first to get that claim paid. If you go through a legal firm, it is highly likely that they will take a portion, if not a significant and considerable portion of that money, which might be fine. And it might be the only way that you feel like you can get that payment paid out. But if someone is able to do that for you as part of their overall package that you're already paying for, you probably want to go to them first. There are people who listen to this podcast who I have had one-on-one clarity calls with who have received a TPD payment and know exactly what I'm talking about in terms of the emotional weight, the financial weight, the shock, and all that comes with, not only for them, but the people around them as well. And I know that if they could go back in time, obviously they would want to avoid or stop whatever happening. But at the very least, they would want to go back and probably radically change their protection strategy. And so if you are one of those people, and you know if you are, I'm sending you lots of love. Now is the time to leave the BS, to stop telling yourself that you'll sort it out later, because later is often never. And if you're part of my Evergreen Money Club, you will know that we're big on accountability. And so we will keep you accountable to getting this done. If you have no idea what I'm talking about, you can check the link in the show notes and be part of my monthly money community and accountability club to get your financial stuff sorted. Otherwise, find a friend and do it with them. Today's episode has been hard, even for me to just talk about, and I feel like I've rambled more than usual. But I hope that it has in some way helped you, ignited something in you, made you feel uncomfortable to the point where you will go and take some level of action. If you do, I would love to hear about it. JessBrady _financial advice on Insta. Up next, we are going to do the last part. We're nearly there. We are nearly there. We're going to do the last episode in my insurance mini-series all around trauma insurance. But for now and for today, you know what to do. Go and be financially fierce. Bye. Bye.
We acknowledge the traditional owners of country throughout Australia. We pay our respects to elders past and present. Any advice is general financial advice only, which does not take into account your objectives, financial situation, or needs. Because of that, you should consider if the advice is appropriate to you and your needs before acting on the information. If you do choose to buy a financial product, read the Product Disclosure Statement, PDS, and Target Market Determination, TMD, and obtain appropriate financial advice tailored to your needs. Jessica Brady is an authorised representative of Paragem Pty Ltd, authorised representative number 1259972, AFSL 297276, ABN 16108571875, corporate authorised representative number 1305567.